it is officially time for this update, baby. Let's go. Stock market weekly update. Can't wait to see it. Guess what? It was a good week, baby. You already know it. You already know it. Up 1.22% here on the Dow, and you see there wasn't a bad day. There wasn't a bad day. We didn't have a disaster of a day. It's a good sign. I love when there's not a bad day. If I want to highlight something from the Dow, obviously I'm going to highlight my favorites here, Mr. Walt Disney, off of their earnings, and I just released a video on that actually earlier. It was accidental, long story. I've been at work for probably 23 straight hours now, and I just got home and realized I forgot to hit publish, so I've hit publish now. So I'm here. Let's talk about the S&P 500, baby. Let's forget about these work stories. Let's forget about work, please. Again, look at this S&P. Look at this 5-week, 5-day chart. I'm very, very tired. Very tired. Wednesday, a little bit rough, but overall for the week up 0.85%. Year to date up 23.39. I love it. I love it. I love it. I love it. My spotlight for here is going to be the Noble Gap Incorporated. You all know Gap. You've been to the Gap before. Well, if you've been to the Gap, my gosh, what is going on with this stock? Absolutely devastated. So, 1 point right, and these highs around 18, down another 8% from there. What's going on? Still is, if you're looking at a 1 month aspect, it's still barely up. So, but year to date, stock's hammered. No shocker. Down around 35%. If we're looking 5 years out, guess what? Stock, hammered. Losing about 56% of its value. So what's going on? Well, starting the 7th here, which was Thursday, CEO Art Peck will step down. Don't like his name. Art Peck, just something about it sounds gross, and I really am not a fan of it. Non-executive chairman of the board, Robert Fisher, will serve as president and CEO on an interim basis, so he's temporary. But Robert Fisher, I like you better than a guy named Art Peck. I don't like that. Updated Q3 and full year expectations. Company expects Q3 of EPS of 34 cents to 36 cents versus a consensus of 55 cents. What? Full year EPS $1.70 to $1.75 versus consensus of $2.06. Rough. That's a rough profit cut there. This was a challenging quarter as macro impacts and slower traffic further pressured results that have been hampered by product and operating challenges across key brands. Okay, CFO Terry Listall. I don't like that name either. How about you fix it? My gosh. They should be thriving right now. I mean, let's be honest, Gap. You're in a time where we have pretty high consumer confidence. We gotta calm down here. And then another update here. As of Friday, you know it. Well, investors are reacting to the shock exit of Gap's Art Peck. Analysts are puzzling over what development means for the planned spin-off of Old Navy. What? Citi thinks the Old Navy separation is likely to be pulled from the table when the Gap board meets next week. So they're going to be separating the Gap brand from the Old Navy into two separate companies, which, I mean, I don't know about that. Again, I mean, not necessarily companies that are long for this world. They've been around forever, but it's just if they're not adapting to the times with this new retail environment, they're not going to be successful. Evercore is of a like mind. We have to think this new development will make original timeline of the planned Old Navy separation extremely difficult. More of the same for Morningstar. Guess what? These are analysts, by the way, and we don't like them. We think Old Navy spin should be scrapped It makes little sense to spin Old Navy until its sales have stabilized. We see little further for a gap without Old Navy. You know what? Reading's not my strong suit right now. It's rough out here. It's difficult to see how Gap can attract a top-flight CEO to fix a company if it's going to be stripped of Old Navy, its best asset. It's very factual. I agree there. So Gap, stay out of Gap stock, please. Going to the NASDAQ. You know I love the NASDAQ. Ooh, True Car. Give me that 5-day, which you can see is up 1.06%. A little bit of a rough Wednesday for the NASDAQ. Okay, that's okay, though, because year-to-date up 27.73. 27.73. Up 1% on the week. Let's freaking go. Up 5% on the month. Let's go. What am I talking about today in terms of stocks here? Guess what? Look at this loser. That's not what I wanted to highlight. Okay then. Okay. Look at this. Down 71.85%. Anaptys Bio. So here's an example of why you... look at this. And just so you know it's true, let's look at that 5. Oh my gosh. This is why you definitely should be wary when you're invested in pharmaceutical company stocks, because now even after that it's on a 5-year basis down 40%. Oh my gosh, at one point riding highs over 130. And why? Well, guess what? Thinly traded, Anaptys Bio craters 74% on robust volume in response to an announcement that its lead candidate Etokimab No, I can't read right now. Etokimab failed to achieve the primary endpoint in a phase 2 clinical trial. In moderate to severe atopic dermatitis. Okay, it's for your skin. Gotcha. Got it. Specifically, Etokimab, an IL-33 inhibitor, failed to sufficiently separate from placebo as measured by the percent change in a scale called EC at week 16. Additional data will be released next quarter. So pretty much, they blew it. And that can happen if it's your main drug and it fails in some manner, if it fails a study or if you get some sort of legal concerns regarding it. This can devastate the company. And guess what? Yikes, this company has been absolutely hammered now. I will consider looking into it because I'm curious. It just, how do you not be curious? Because you're like, what is going on with this company? So you can look for potentially on these earnings. Okay, look at that. The company's a negative earner. I hate that. EPS surprise? Well, guess what? Not surprising. They continue forecasting for lower and lower earnings. Yikes. And revenue of, where's that valuation coming from? That's garbage revenue and decreasing revenue. So then again, you stay away from the stock if I were you. That's all I really got for the week. It was a fantastic week for us, so I hope you enjoyed this.